Okay, let's dive right in. We are going to tackle one of the biggest, most hotly contested financial debates out there. But what we're really going to do is uncover a simple, incredibly powerful truth about how wealth is actually built. So, you've probably heard this question a million times. Is buying a home a bad investment? It's a question that honestly, it divides experts and it completely paralyzes people who are just trying to do the right thing with their money. And you get why, right? You hear these super convincing arguments from both sides, and it's so easy to just get stuck. I mean, take a look at this. On the surface, both sides make a really great case. The whole rent and invest crew, they'll talk about higher stock market returns and all the flexibility you get. Then, the buy a home side fires back, talking about forced savings and building real, tangible equity. But here's the thing. What if focusing on this choice is just a distraction from the real problem? So why do we get so hung up on this question? Well, it's because most of us are operating without any kind of real financial plan. We're just kind of winging it. And that leads to two wildly different financial realities. Here is a gut punch of a number for you. 40 times. In America, homeowners are worth, on average, 40 times more than renters. And that's not a small difference. That is a massive, life-altering chasm. And here's what that looks like in real dollars. The average homeowner, they have a net worth of over $400,000. The average renter, just $10,000. Now, this doesn't happen by accident. It points to a really fundamental difference in how wealth is or isn't being built. But listen, this isn't just about owning a home. It's a symptom of a much, much bigger issue. Get this, a staggering 7 out of 10 people are living paycheck to paycheck. They have no financial cushion. They are completely trapped in a cycle that makes building any kind of wealth feel totally impossible. You know, financial expert David Bach has a great name for this. He calls it the no plan. You know the feeling, right? Money comes in from your paycheck, money goes right back out for bills and whatever else, and at the end of the month, you're just left scratching your head wondering, where did it all go? So what's the alternative? Well, it's a system designed to work for you, quietly, in the background. This is not about finding more willpower or becoming some kind of budgeting wizard. Nope. This is about making the process of building wealth completely effortless, automatic. And this is the crucial point. Willpower and budgeting, they're fragile. Life gets in the way and they break. The real secret, the one that actually works for millions of regular people, is automation. And the system itself is ridiculously simple. It's all about one idea. Pay yourself first. The second your paycheck hits your account, boom, before you can even touch it, a slice is automatically whisked away into your investment and savings accounts. And then you just live on whatever's left over. Think about it this way. The government doesn't send you a bill and just hope you saved up enough for your taxes, right? No way. They take it automatically right out of your paycheck. Why? Because they know if they waited, the money would be gone. You have got to apply that same unstoppable logic to your own wealth. Treat yourself like you're just as important as the tax man. Okay, so this is where it gets really fun. This might sound like a huge leap, but let's break down exactly how this automatic system can turn what feels like pocket change into a genuine, life-changing fortune. Let's start with this number, $27.40. What is that? Well, that's what it costs per day to burn through $10,000 in a single year on all those small, unconscious purchases. But what if? What if, instead of letting that money just vanish into thin air, you automatically invested it? What could that tiny little daily habit grow into over a working lifetime, say 40 years? You ready for this? If you invested that amount and earned a pretty standard 10% annual return from the stock market, it could grow to over $4.4 million. I mean, that is the absolutely jaw-dropping power of putting your savings on autopilot and letting compounding do its thing. And I know what you're thinking. Where do I even find that money? Well, it's usually hiding in plain sight. It's the fancy coffee, the lunch you buy instead of pack, those subscriptions you totally forgot you were paying for. It's what David Bach famously called the latte factor. And believe me, it adds up way faster than you think. So let's bring this all back home and finally answer that big question we started with. Is it the house or is it the stock market? And the truth is, it's the wrong question. It's a false choice. It frames wealth building as this either-or battle, where you're forced to pick a side and miss out on the other. But that is not how wealthy people think. The data is super clear on this. For decades, there have been two primary escalators that have consistently created wealth for everyday people: investing in the stock market and owning real estate. The real secret isn't picking one escalator. The secret is figuring out how to get on both. And what's the engine that powers both of these escalators? You guessed it, it's that automatic pay yourself first system. That's how you automatically save up a down payment for a home, and that's how you automatically fund your retirement and investment accounts, month in and month out, without ever having to think about it. Remember, this isn't about chasing hot trends or meme stocks or trying to get rich quick. Real lasting wealth is built on a plan that's honestly kind of boring, but it's beautiful because it's automatic and it just flat out works. So here's the final point I want to leave you with. Every single dollar you earn is already going somewhere. It's already been allocated. The only question you really have to ask yourself is this: have you decided to put yourself at the front of the line?